Hello ICT traders, welcome back to the channel. And in this video, I'll be doing something very simple and straightforward. I call it the multiple time frame trading. All right. Now, one of the basic or the major problem a lot of traders have in the market is to look at different time frames and navigate through different time frames. And that is exactly what I want to show you in this video. I want to show you how to go through. You see, these are some of the major time frames that a lot of intraday traders use: the daily time frame, the 4-hour time frame, the 1-hour time frame, the 15 minutes time frame, and the 5 minutes time frame. Now, how do you navigate through these time frames? How do you do your analysis? How do you look at the market? So let's go into this and I will show you everything step by step. Now, the first thing to do, all right, everything must be in context. Now look at your chart. All right, I want you to just look at the chart. First of all, whenever you come to the market, look at the chart and look at what is the market doing. If I am coming to the market and I look at what is happening here, there are two things I will look at. The first thing is this bullish movement. The first thing, what this tells you is that this is a bullish dominated market, or the buyers are dominating the market currently. Why? Because I can see these candlesticks printing greenish going up. Now, the time frame also matters. So this is the daily time frame. If you're doing anything that has to do with intraday, you can check the daily or the 4-hour as the major time frame that will give you an idea of where price is going. What this is telling you is that price is going up. Now, look at what is happening elsewhere, such as your market structure, what has happened previously. Look at this. Can you see the most recent is this one, a break of structure. We now come to structure, right? This is even a shift in market structure. It's not only a break of structure. The difference between a shift in market structure and a break of structure is that a break of structure enables the continuation of a trend, and then the market structure shift is indicating that a particular trend has changed direction. What that means is that if we have an uptrend and all of a sudden we have it coming down, we have a shift in market structure. All right, so I want to go as basic as possible in this explanation. So we have this market structure shift. Now the next thing to do is, how much data do I need to look? Now, to make it easier, you can look at least 60 days back. All right, let me show you that. If I am doing from here, I need at least 60 days data to look at. Let's say 60 days data. What is happening around this 60 days data? So I could just simply say, okay, my area of focus should just be this entire area, 60 days. Just straightforward. I don't want you to complicate anything about trading. It's as straightforward as anything. So after seeing this market structure shift, now there is a popular saying in the market that the trend is your friend. As a sane trader or a trader that knows what he is doing, what do? Do you want to buy here? All right. Do you want to buy here? Obviously, price has gone up. We could see that it is a bullish market. Now, it is left for you to use your knowledge of price action to know that anytime price has already gone premium or it has gone up to that level, you don't want to be buying here. All right. You don't want to be buying here. This is the same thing with the business knowledge, that opportunity is grabbed before it becomes visible to the public. Every time the public sees an opportunity, it is already too late. Every time you hear about an opportunity in the public, it is already too late. Those who are in the inside take advantage of it before it becomes an opportunity. So this buy did not start from here. It did not start from here. It actually started from here. All right? It started from here. Here. Some people started knowing that this is a buy when it was here. Some people started knowing that this is a bullish movement when it came here. Some people here, some people here. Now, the people that will be completely crushed in this entire movement are those people who will come later and realize that it is a bullish movement. And those are the uninformed traders. Uninformed traders. They don't know what is happening in the market. They started buying here. All right. And the market started crashing. Now, let me show you how to go about this. The moment you come to the market and you realize that market has already come to this area. Now, the simple thing to do is that if you see what is happening here, let's say the thing I saw was this first bearish candle coming in as what I am watching right now. From my daily time frame, I could simply go down to 4-hour time frame. Now, what I need is to look for a valid retracement. Why? Because price has already gone up to this area, sweeping liquidity here, and even here. All right, if I were to look so much data back here. So all this liquidity has been swept. So what do you think price will do? Does price keeps going when there is no liquidity? No. Price will now seek more better price. Nobody keeps buying when there are no sellers. The only reason why smart money keeps buying is when there are sellers in the market, and this is why we will drop to the lower time frame to wait for a retracement. The retracement now will give you a better price. At this point, all right, it has already become expensive. Nobody wants to buy something when it is expensive. Everybody wants to buy when it is cheap. At this point, the price is cheaper. And what do we have at that point? The last time the buying pressure started again. All right, I just want you to look at this logically. All right, just keep it in a logical form. Here is expensive, here is cheaper. Where do you think you want to buy? Here. And this is where we got the concept of premium and discount. Premium and discount. Now, there are so many areas that are of importance. That's where the institutional reference point come in handy. You can go to my YouTube channel and watch all of it. This is an order block. This is an unmitigated fair value gap. This fair value gap has not been touched throughout this movement. So it is possible that there is so much interest in this area, you could do them according to importance. All right, another fair value gap here. So all these areas are very important. Price moved, came back before another push again. So from here to here is a new swing. So if the retracement is coming, I want to ride it, because the daily time frame, this is what I want to show you now. The daily time frame is a big time frame that takes time to unfold. I will want to work with the 4-hour time frame. And if the 4-hour time frame is telling me that the market is no longer going to go up, all I need is a confirmation from the 4-hour time frame to tell me that price wants to come down to where there is discount. Now, look at this. You're not going to use the same market structure delineation you used in the daily time frame. On the 4-hour time frame, this is what happens. Your shift in market structure came in around this area, right here. Let me adjust it correctly. So you see, your shift in market structure came in right around this area. All right. And it left you with an order block here. Right at this point, you have a fair value gap right here. Where do you think price will be more interested to come before it continue pushing up again? This area. This will now give you that opportunity to take advantage of this sell, because it is going to sell to this area, but it is not yet ready. You need to hear what I have to say first. All right. So if the sell is going to come, the only thing I need is for the retracement to officially start, because it's possible that you start selling just because you heard I said sell. Like this one, you could see the price push down to this place. Before the candle closed, it even came back and printed another bullish candle. This could have, ended somebody's entire account. So this is where this becomes very handy. What I need to confirm that this sell will start is simply a shift in market structure. This is the 4-hour time frame, and I want to see a shift in market structure. Now, this is where it becomes handy. When do you need the shift in market structure, and in what time frame? Remember, I told you that I jumped from the daily time frame to the 4-hour time frame. Now, I want to see a shift in market structure in the 1-hour time frame. The shift in market structure should come from a time frame lower from this, all right? Just one time frame lower, and this is how it works. From the daily, the time frame lower to daily is 4-hour. The time frame lower to the 4-hour is not 3 hours, is not 2 hours, it's 1 hour, according to trading pattern. The time frame lower to 1 hour is the 15 minute. The time frame lower to 15 minutes is the 5 minute. The time frame lower to 5 minutes is the 1 minute. Don't confuse yourself. So coming back to the 1 hour time frame. All right. Now this is when I will wait for a shift in market structure. Shift in market structure. If I see one, all right. If I see a shift in market structure, now mind you, my daily time frame is bullish, which is supposed to be the ideal time frame. My 4-hour is just in between, showing me retracement coming in, but I have not fully seen the retracement ready. I want to see a shift in market structure, and that is why I drop down to 1-hour time frame. All right, to see the shift in market structure coming in before I do anything like selling, because I know they are not interested in going further up. They are interested in coming down. And this was the candlestick I told you would have removed somebody. There was no shift in market structure from this massive downward candlestick. All right. And the interest point for price, if it will come back, is these places. You remember the order block and the fair value gap. And that is my confidence that I will sell. Now, you will tell me I am counter trading, and this is it. This is exactly what I want you to know. Everybody in the forex market counter trades. I said everybody counter trades, except if you are trading in the monthly time frame. But if you are trading in the weekly, a weekly may be giving you a retracement, but that retracement is just a retracement in the monthly bullish movement. And so if you keep breaking it down, that is why ICT will tell you that price moves in fractal. All right. So look at this. I just hope this is explanatory enough. I'm just taking time to explain this to you guys because I know some of you will be benefiting. Time and again, during weekends like this, we just do such kind of analysis. Look at this. Look at this. Price pushed up, came down, push, had this one, push, failure swing. Look at this area. Failure swing. Now, those of you who have been going through ICT concepts, what do we call this scenario? What do we call this scenario? When we have price like this, boom. This is a scenario we call a breaker block, a bearish breaker block, where we have price right here. All right. A bearish breaker block. Price push, had this push down, push up, sweeping liquidity, crashing down. This is where the official downward trend will start coming in. The official downward trend will start coming in. Mind you, if you want to be careful enough, you would be doubting this particular retracement. You see this one, you will be doubting it because of this push up. So if you want to stay away, because the market always gives you dynamic approach. So that is why you need to be consistent in your approach and then dynamic in the way you take trades. All right. consistent in your approach, and then be dynamic in the way you take the trades. Let's see. This is where the shift in structure happened when I was watching it, but then you need to be careful. This can be a different thing. All right. It is not officially a shift in structure because this retracement is not coming in the way I want to see it. So I would prefer to have my shift in structure when I finally take out this area, because this could look like a good retracement. I have very big candlesticks. I need at least 3 candlesticks officially. So that is why this breaker block can fail you. It can fail you in some scenario, and that is why you need to be careful. I wouldn't have taken advantage of this. All right. No. I wouldn't have taken the trade, even though it could have worked, but sometimes you would get crushed. That is why you need a proper way to define your shifting structure. You need at least 3 candlesticks like these ones. Let me show you. When you see price coming down like this, you see 1, 2, 3 candles. You need at least 3 candles, and you need it to close below each other. All right, before you can call it an official retracement. I have explained this severally. You can check my video on fake and real retracement. So this is a breaker, but then this retracement inside it is a difficult thing for you to spot. So you could just use this place as your shifting structure officially. I have to take time and explain this so you can see this. This is your shifting market structure officially. It's called change of character. Other people call it change of character. So now, from now, you can start selling. All right. From here, you can start selling and you would not have problem. So if you are selling from here, anything you are doing, it will be validated because you have officially gone lower and shifted direction. Now, this is where the concept of dropping down to the lower time frame comes in handy. You can go to the 15-minute time frame, all right, and start looking for entry points. All these ones, after this shifting structure, you can refine it better to look better. You can see them. So after that, you could see price giving you a lot of opportunity to take trades. Let's see this one. All right, you see an opportunity to sell, break of structure, opportunity to sell, break of structure, opportunity to sell. You keep crushing it. You keep crushing it, having it in mind that this market is not going to sell forever. It's just trying to come here. All right. So you keep looking for this opportunity to sell, to sell, to sell. You see, all this one is keep coming as an opportunity to sell. A wise person in the market will be using this opportunity to sell. And this is what other people call counter trading. Keep selling. All right. You keep selling. You look for opportunity to sell. Let me just play it out to play faster so you could see what I'm saying. You keep taking opportunity to sell, to sell, to sell, to sell, until when price will finally tell you that I am not going to sell again because I have reached the point. So this one is coming. All right. Now look at this. The moment price reached that point, you would begin to see a massive reaction from the buyers. Why is that happening? That is happening because the buyers are still interested in this discount area. The last time they wanted to buy, price was $1,000 per each share. Stock traders will understand this. And now price is just $200 per share. Is it not an opportunity to buy? It is an opportunity to buy. And that is the concept behind trading with this idea. So you see, price, if price did not give you the opportunity to buy from this fair value gap, it keeps coming down to this area, to the order block. All right, to the order block. You see, this is them establishing their presence. Immediately it touched the fair value gap. They told you that we are here. All right, they are telling you that they are in this. So this is the idea. All right, I just wanted to show you why these things happen in the market. This is the idea behind trading with this kind of concept. All these ones is just them telling you that we are in the market. They started showing you that they are here, right here, and now they are telling you that we are interested, fully interested. All right. I hope this explanation is enough for some of you guys to understand how trading is being done. And this is just a snippet of the kind of knowledge I'll be sharing in the premium community, like especially in the Zoom meetings we'll be having with my followers. My mentorship is starting very soon, and get ready to join if you're interested in getting a detailed explanation of these things. So I'll be stopping here, guys. Just this one is enough for you guys to have an idea on how to trade, how to look at the market, what happens in the market, guys. All right. So thank you guys for watching. Ensure you give me a like and turn the bell notification. See you in the next video.